Mic check, mic check. Can I get a mic check confirmation from anybody? You guys hear me?
Yes, yes, Leroy.
Ah, good. Thank you. Thank you so much. Fantastic. I'm just gonna quickly mute everyone. Okay. Good evening, guys. We're just gonna, got so many people. Okay. Some people are still trying to log in and, the usual chaos in week one. But yeah, we're just gonna give them about 60 seconds, then we can start. Good evening, everybody. Just give me 60 seconds while I sort out some admin stuff. It's always like this is the first week, I think. Some people join on time, some people join the next day, then we need to figure out who's who. But yeah, I hope you guys are doing well. I hope you guys are ready because today we are literally just going to go, okay? Okay, cool. I'm starting to see them. So let's just, they're actually like just joining in, guys, and then we'll start. We shall start now. I apologize for this. It's just after this first week, everyone will be ready. Everyone will kind of like know my drill, and most of you are still on the private Telegram group, right? So a couple of people are still to add. Okay, but for the most part, I think everyone is in, and then those joining us, will join us. All right, those joining us will join us. By staying in this meeting, you can send me that. Got it. Right, 365, shake my hand. Good evening, everybody. Thank you so much for joining me yet again. We are literally at the start of our 8-week journey. Yesterday, all we did was basically an introduction. That's all we did last night. I introduced myself, introduce the Academy, and introduce supply and demand. Fundamentally, these concepts that we're going to be working with. And I know a lot of you are dialing in from all over the place. Please remember the live classes, unfortunately or fortunately, normally run for about 2 hours. Okay, they normally run for about 2 hours. So tonight we're going to see where we fair play there. If you're new, classes on Tuesday, Wednesday, Thursday, 6:30 South African time. Yesterday I did say from week 3 into the course, normally I ask for Mondays as well, because there's just a lot of stuff to chew on. If you've never traded before, you're in the right place. If you've traded before, it doesn't matter, right? You are going to spend a lot of time unlearning a lot of the stuff that you already know in trading. And I'm going to do a good job of showing you why. So I'll always justify why you need to stop doing something and start to do something else, right? And we're going to have to back test that to make sure that I'm not misleading you. I've just changed my setup from yesterday just to assist, right? Those of you who got my official email today, you received the link, I hope, to TradeView, where I said we're going to be doing a lot of our analysis, right? We're going to be doing a lot of analysis on TradeView, so you should have this link, right? But it's completely for free, so if you don't have it, I'll send another email towards the end of the week with everything you should have by now, all right? But this is just one of those things that I sent out some time today. But if you don't have TradeView yet, it's not a train smash. Today you're going to watch me use it. My goal is every weekend after a week of class, all you get to do is to back test everything I've taught you. It works better that way. Remember, as I've already stated yesterday, it's just that there are a few new faces. So I just want to quickly cover some basic stuff. Remember, after I teach you for 3 weeks, which is Tuesday all the way to Thursday, I'm going to also send you a PDF. I call them weekly PDFs. So basically, they will summarize the important things I've discussed. That PDF will be very short. Week 1 will probably be about 5 pages, 4 pages. Week 2, maybe 10 pages, but it's never more than 50 pages. These PDFs are your lifeline. It's the only way you can test, do I understand what he said, before I build new concepts the following week. So please use the weekend to go through the PDFs and also to back test the stuff we're teaching. Right, so tonight let's start. I mean, really last night we had fun. Oh, I had fun. I always have fun Just a couple of house rules. Number one, if you hear me say I'm sharing my screen and your screen didn't change, let me know. I sometimes forget. Sometimes I'll get so excited, I'll start to talk about a chart, but you can't see it. You have to let me know. Just type down there on the Zoom chat box and let me know that I'm not sharing the screen, number one. Number two, if you have any questions along the way, don't save them for the end. Just literally stop me, just type your question. I won't lose my train of thought. Okay, right. So last night we started our journey on supply and demand, and tonight we want to start to sink into this understanding. This for me is how I start all my courses, and this is how I really am going to need you to kind of like start to grapple, right, with this concept of supply and demand, right? And I just want to make sure I am sharing the whiteboard and not any charts. Okay, cool. So I am on screen two. I'm sharing the whiteboard, right? So supply and demand is what we do, is what you guys are going to start doing as 365 traders. And tonight I'm going to start to develop this concept. So what we're going to say is supply and demand is the universal law of how price moves. All right. So it's beyond a trading strategy or a method or an extraction thing. It's simply understanding how price reacts to price, all right, outside of us being retail traders. So supply and demand is basically the motion in which price moves between banks, or rather between big players, banks, hedge funds, insurance companies, oil tycoons, people with a whole lot of money, private hedge funds, the Ray Dalios, Warren Buffett, private firms, Goldman Sachs, JP Morgan, and the list goes on. These guys are looking at price. They're looking at an asset. Essentially, the asset could be a stock like Apple, but the asset sometimes can be something completely different. The asset could also be Euro USD. The asset could be, crypto, but we'll talk about that later on in the course. It's slightly different, etc. Right? And when they look at these assets, they want to know a couple of things. Number one, current value, right? My course is not difficult. It's not going to get complicated. This is just an intro into tonight's lecture. We're not going to go into deep economics, right? The course is designed that anyone with whatever background, if they run with my rules, right, they can trade successfully. So if you feel lost, let me know, but don't panic, right? Everything is going to be just broken down nicely, right? So these big companies are looking at current value of the asset. What is the current value of Apple stocks? What's the current value of USD ZAR, pound USD, whatever it is? Then they want to find out, right, what's the real value of that asset? So if a stock is $1, let's say 365 Trading Academy goes public. We go public and we want to start to sell our shares, all right, to the public. And we start off by saying 1365 Trading Academy share is worth $1, all right? That could be the current value, but the real price, the real value, right, or what just happened? The real value of the asset could be more. It could be the fact that Leroy has been training for 8 years and teaching people blah, 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 blah. So in the next 5 years, we expect that one share will be worth $10. Banks start to circle stock prices like that. They want to buy it at $1 because that's the current value, and they're hoping to push it up to its real value. Okay, simpler example, or a much more common example, which is where we're going to spend a lot of time. Let's say you're looking at a Forex pair, Euro USD. Well, the question then is, what is the exchange rate of the Euro USD? 1,1672. We'll talk about all this later on versus the dollar. Banks are going to ask themselves the exact same question again. Question number one, why does it do this when I click out? Question number one, what's the real value? Versus current value, right? I have no, does it look, it looks weird when I click out, right? So I'll leave it like that, okay? And they're gonna do the same thing with everything. All of this, the price fluctuations, the price movements, everything to do with price moving up or down will be regulated by supply or demand, which is what we are going to start with. We just quickly mute everyone who just joined in late. Good evening, good evening. If you're new, just simply drop me a message. There's no need to turn on the microphone. I am recording these classes for you, so you don't want that kind of like interference. So just feel free to type, through and through, and I will respond accordingly. Right, so supply and demand. It's our universal principle around price. What then I'm going to do is I'm going to build concepts around supply and demand. We're going to start with a few basic ones tonight. Concept number one, buy low, sell high. This thing is not only a concept, it's become a cliche. It's not just a cliche, it's become a market slogan, but it is also the main reason why a lot of traders lose in the markets. They don't still understand what buy low means, right? So is Bitcoin today just a common thing? Bitcoin, I think, is falling. I hope it's falling. I could be wrong, but I'm pretty sure when I left it was just struggling to maintain 40-something thousand US dollars, and maybe it's dropped a bit more. So the question would be, is Bitcoin today, I'm just checking the real price, current price of Bitcoin right now, as we speak right now, Bitcoin is trying to fill a wick. If you saw my post yesterday, I kind of like mapped out this stuff 2 weeks ago, but you're going to learn. That's why you're here. You're going to learn to be able to read price direction accurately, right? To really know where price is going. But the current price of Bitcoin right now is about 46,000 US dollars. So you as a 365 trader, whatever asset you're looking at, you are going to have to ask the main question. If I was to buy Bitcoin today, is this me buying low? Is this me buying low today? Or is Bitcoin so overpriced that it will struggle to get to 60K, and someone like me buying today might get washed away, right? When price crashes, anyone who buys too high loses. It's that simple. When you buy Euro USD and you buy here thinking price is going up and price goes against you and it hits your stop loss, you lose. You have missed this entire relationship of buy low, sell high. Of course, I do believe this is very low, right? I think if you're thinking long term for Bitcoin as an asset, but we'll talk about crypto, as the weeks come. And so buy low, sell high is a common concept around supply and demand. It is the mega concept that you need to understand. There is never a time smart money or big banks make the mistake of not buying low and selling high. It is also the daily curse of retail traders. Retail traders, most of the time, buy high and sell low. That's because of different trading strategies, right? So why supply and demand? Supply and demand will demarcate where buy low opportunities are. And we're going to discuss the first version of that tonight. Some buy low opportunities are simply low today, all right? Like Bitcoin, 46,000 US dollars. I think it's a low for today. Some buy lows are called logical buy lows, which is price is quite high today, but it is the lowest it's going to be for a very long time. Therefore, if the prediction of the value is it's going to go up even higher, I might as well buy now in the logical low. It's a big difference between the two, but we need to understand it. All right, so supply and demand is our universal law. Buy low, sell high is our first main concept. A couple of things to build around the universal law and the concept are the following. Number one, and I talked about this yesterday, nothing, please, every day tell yourself, nothing is random in price. It can be random to other retail traders. It can be random to everyone else who's trading around the world. I don't care. If you're a 365 trader, after you do the course, nothing should be random to you. Bitcoin doesn't go up because Elon Musk is tweeting whatever. That's nonsense. If you look at your marketing structure after the 8-week course, you should be able to tell. You should never be waiting to see NFP data to know whether markets are going to go up or down. You should wait for the data for confirmation, but your structure, the way that structure looks, 48 hours before NFP, 24 hours before NFP. NFP, by the way, is a basic news event in the Forex market. If you're new to trading and you don't know about it, we'll talk about it, as we proceed. But my point is, there is no waiting for spectacular news in the market. Everything in the market is planned. Why is it planned? Because of these guys. Banks, and I know I spoke about this a little bit yesterday. Banks run the markets. The foreign exchange is not for you and me. It is never designed for me to have a full-time job as a full-time trader, not for you to make extra money in the markets. The Forex exchange market regulates geopolitical economic activities, trading, wars, etc., currency, imbalance, the IMF loaning people money base. It is literally the heartbeat of how globalization works. Okay, that's what the foreign exchange is. It was there before trading was allowed for retail traders. If they decide to take it away, which they won't, but let's say they did, foreign exchange literally can't go away. The only thing that could completely start to change the idea of Forex markets is the complete adoption of cryptocurrency, which will take forever, all right, literally forever. So these markets are not here for us. They're not here for our strategy. They have a pre-existing function. What we are doing with supply and demand is we're starting to tap into that function. All we want to do is to understand where is price going, where is price right now, all right, and where is it coming from, which I brought up in my introduction last night. Where is it going? Where is it right now, right? Right now would be current price, the current price. And where is it coming from? Where is it coming from? Now, where is it coming from will be either two things. It will always be price is coming from a supply. If price is coming from a supply, it is going to a demand. This is the pathway. There is no, there's no other way. It can trade sideways. It can take its time. It can zigzag. But when markets leave a supply, they must find a demand. In the same breath, when markets leave a demand, we know for a fact that markets are going to a supply. So when we say, where is price going? Well, it always depends on where it's coming from. I know where price is going because I understand where price is coming from. If you understand this, which is what we're going to do for the next 3 weeks together, that's the first big chunk of the course, is making sure you guys can see price structure and understand price direction the way I do. You can do that for the first 3 weeks of the course, we are winning, because by then, when I say nothing is random in the markets, you will believe me. Now, here are a couple of rules that I need to build in, and all my lectures are like this. The first 30 minutes of class, I give a rundown introduction, then I'm going to slow down from 7 o'clock, all right, and start to break things down until 8:30 p.m. All right. Now, here are a couple of things, just a couple of things you need to bear in mind when we're looking at this whole thing. A couple of rules that I need you to know. Number one, despite how fast I talk or how slow I'll start to talk, despite whatever is going through your mind right now, nothing is hard. There's absolutely nothing hard I'm going to tell you. I have a 7-year-old, brilliant kid, love him to bits. He now understands higher time frame supply and demand. That's where he is right now. He's 7. He understands that when pound USD gets to this area, it's time for dad to sell, right? That's how far he's gotten. And I'm so busy. So please don't think I'm spending 8 hours a day doing him Forex. No, it's just a simple thing. He got that, that's a supply. That's what supplies look like. All supplies look like this. This is a demand, a 7-year-old. My oldest senior trader, and senior in the sense doesn't mean someone who's old, even though he is specifically the oldest senior trader. Senior traders in the academy are currently a small group of traders. Okay, they're not that small, but they're traders who've been with me since 2018, halfway through 2018 and 2019. So they were with me when I started to teach people. I've been trading for about 8 years. Some of them, I met them when I was getting regulated by the South African Institution of Financial Markets. Some people, I met them at Rhodes University. It's just been meeting people, as time progressed. These senior traders have used the same rules, done the same course. Well, actually, some of them, the course they didn't even have module 2 at the time that you are about to do. And they have broken out of this perpetual habit of making some money and then losing it, and then making some money and then losing it, because you want to get out of that. It takes time, but you really want to end that cycle. What you want to do is to become consistent. Yeah, sure, you can have bumpy days, but be consistent, all right? And these guys are what we call senior traders, traders who have mastered the craft, mastered 365 rules, and have proof that they've grown their accounts, right, into 5 or 6-figure accounts, right? So right now I've got 108 of them, right? 6-figure, and then 32, something like that, who are 5-figure accounts, and I'm hoping they will end as 6-figure towards the end of the year into next year, right? There's no rush. You don't pay to become a senior trader. You simply just work your butt off like you're doing now. Now, the oldest senior trader, like now I'm using the word senior in terms of age, right? In the senior traders program is currently, I think, 68 this year. He joined me when he was about 66, just off retirement. What am I saying? I'm saying my 7-year-old understands this. We have a 66 years old guy who did one-on-ones with me for about 6 months in 2018, straight off retirement, and he's been trading his pension since then. All right, and he's done extremely well. Nothing is hard. Nothing I'm going to say is hard. Anytime something feels hard, repeat this to yourself. It's new. It's just new. And when something is new, you're going to need to hear it a couple of times. And that's how I teach. I will repeat concepts. I will build up something today, and tomorrow I'll explain it in a different way. Then I'll build it up, etc., etc. All right, that's just generally my pedagogy, my methodology in teaching. You will get it, but you cannot shut down and say it's hard, right? Once it becomes hard, you can't make money in the markets. You will lose money in the market. So please don't shut down yet. Nothing is hard, all right? It is just new. One day after you master my basics, it will become easy. That's the process. That's number one. Number two, biggest rule in class for module 1 is price is everything. Everything that we need to know about supply and demand, about being a consistent trader, is going to be found in the charts. You are more than welcome to use a pure fundamental approach to the markets. You're more than welcome to do stuff that I don't do. So I don't use indicators. I don't join a random Telegram groups because then I get conflicting ideas and that bothers my mind. I hate this device. I hate it with a passion. I hate my phone, both of them. I don't even know where the other one is. I hate them. They're extremely distractive. Those of you who try to private message me, you will know I take forever to respond. In fact, if you want to talk to me, you're far much more better talking to my team because they do a good job of leaving notes and letting me know who to get back to, which sometimes I struggle with. So I don't join random groups. I don't take random signals. I keep my mindset clean. If you want to quicken your pace, if you're in here, either you've registered or you want to register before the 9th. But if you've already registered, you've already paid. If you've already paid, commit. Commit to this. Please give me my 8 weeks uninterrupted with you. But not just coming to class. Commit to the ideas, especially if you've traded before. You are more than welcome to compare and contrast as we go about it. In fact, I encourage that. But like I asked you, for the next 8 weeks, no trading. No, do not experiment with real money until you've mastered everything. But commit to one strategy moving forward. All right. So price is everything. And for us and for me, my supply and demand levels that I see on my price chart are generally always enough for me to know where it's going. I will, however, as we spend time together. Now, this is beyond 8 weeks. I can't teach you everything in 8 weeks. 8 weeks is enough to get you trading, all right, and down the right path. But if you follow the materials, if you read the book, if you follow the PDFs, the YouTube channel, and you take part in the 1-year mentorship program, which you're all entitled to, I will build your overall knowledge in the Forex market. You will know what interest rates do and why they work like so. You understand where fundamental analysis plays a role in supply and demand and how supply and demand fits the fundamentals and how the fundamentals underpin supply and demand, etc. You will learn all of that. But for now, in module 1, tell yourself price is everything. When I speak about price, those of you who are new to trading, I'm simply talking about this thing called TradView. Everything I need to know about Bitcoin right now is in front of me. I know that El Salvador has decided to make it a legal tender. I know they are buying Bitcoins every day, right? El Salvador decided to make Bitcoin the main currency in the country, but that doesn't mean I need to buy Bitcoin now. There is a positive fundamental push for Bitcoin. Anyone on Binance yesterday, the day before, and today, 3 days in a row, trying to buy the news, that there's a country that has gone up outside the grain and made Bitcoin the main currency, is losing money right now, even though fundamentally that's good news. Why? Because price is everything. 2 weeks ago, I spoke about this on social media. 2 weeks ago, I said, don't forget that here there's a golden fib. We'll talk about this stuff in module 2 together. But for those of you who've done my course or have seen my stuff or understand supply and demand, you know we were ready to sell. Now, this is why. Because it's going to happen every day in the markets. Every day, there's going to be a couple of things. Number one, there's going to be a preset condition. The banks, the news, the media, institutions, hedge funds, your broker, market makers, liquidity providers, all these terms, you're going to learn about them. They are going to create market conditions. What's a market condition? A market condition is the scenario, the availability, the creation of an incentive to do a specific thing. I can create a market condition to buy. If you watch my introductory lecture yesterday, I kept repeating myself. I say, if I want to buy a car, I need specific market conditions. The main ones I need someone, right, to sell it. If I want to buy a car, I need someone to sell it. If I want to sell a car, I need market conditions that will call buyers in. All right, so I'm not going to repeat that example yesterday. Lecture 1 is already on our YouTube page. The next, so you can just recap that at your own time. But essentially, big banks, smart money, first create market conditions. Now let's use the most recent example I can think of, which is Bitcoin. There is an entire country for the last 2 years on mainstream media. All you've heard about cryptocurrency is they're gonna ban cryptocurrency. Oh, it's unregulated. Oh, the terrorists use cash, by the way, not Bitcoin. Bitcoin by design is an open ledger. That means every transaction is recorded. Even I can check what Afghanistan terrorists are doing, right? It's a stupid argument that media came up with, all right? But in this particular scenario, for the last 2 years, there's been information that Bitcoin might be crashed. The crypto markets might be removed, might be banned, might be out-regulated, etc. And here comes a country in the midst of all of that saying, we are going to make Bitcoin our main currency, right? That's wildly positive. So there is a market condition to buy Bitcoin, because remember, if you believe that Bitcoin is going to go to the moon, it's going to make 100K, 200K. When you hear the news that there's a country that's legally adopting Bitcoin, everybody wants to pump the market. Market conditions. It's time to buy. As a 365 trader, you have to remember this. Price is everything. So what you do is you don't make the move to buy because of what you've heard. You can't check price, right? You don't know this yet because I haven't taught it to you, and I will with time. But markets were slowly heading towards a supply before the announcement of what El Salvador is doing. Markets, Bitcoin was slowly pumping towards a supply. 2 weeks ago, if you check my Facebook page, I say we're going to sell. I am not in El Salvador. I've never been. I didn't even know they were going to make that announcement on the day they made the announcements. I just had pending orders to sell here because price is everything. When markets get to a supply, I shut down Leroy. You understand? I stop becoming me. I just become a trader. A trader has one function. What are the rules? Where's the execution? If it meets my rules, I take the trade. I don't emotionalize the trade. I don't say, I love cryptocurrency so much. I love Bitcoin so much. I am not going to sell. I'm going to hold, right? And I'm holding. I didn't sell my coins. I'm holding coins. Sure, I am in sell trades. That's different. When you hold to invest for the long term. But while I'm holding, hoping price goes up, I can take trades to sell, to create more profits, to buy more coins. And we sold there for that specific reason only. Price will always dominate whatever narrative is on media. It does not matter. This yellow arrow here, I don't have time for it, but this yellow arrow here, I kept saying I'll do a video on this and I just didn't do it. This yellow arrow, you see this yellow arrow there, right there? This was when Elon Musk started to tweet about stopping Bitcoin or Bitcoin being, not green enough for the economy. So Tesla wasn't going to use cryptocurrency. And a lot of people thought that was fundamentals. And a lot of people thought this moved the market. Completely not true. This was a simple retracement area from this selling point, which we easily could see before we even knew what Elon was going to talk about. I am bringing this up in my introduction tonight before I end to let you know I have high expectations of all of you. You will all get to this point. There should be nothing about the charts that you can't see coming. Some charts are unclear. I understand that. Even for me, some charts, if it's too unclear, you do nothing. You just move on. There are 600 charts on TradeView. With the right broker, AvaTrade will link you to stocks, crypto, FX in one broker. I love AvaTrade. It's a good broker. It's got a lot of instruments. IG Markets has 17,000 markets you can trade with my strategy, supply and demand. Each market is a stream of income if you get this right. If you start to really understand what I'm putting into your hands, Euro USD is a stream of income. USD ZAR is a stream of income. Buying crypto is a stream of income. Once you master the stuff, all you have to do is to understand price. All right, so introduction over. I hope you guys are okay. Once in a while, I will do a temperature check. Let's do one right now, actually. Can I do a temperature check in the Zoom room so I know who's watching Netflix? Just type yes or no if you understood me. Yes or no if you're happy. If you're not happy, type no. Yes or no if you understood me. Yes or no if you're happy. Jay says, guys, imagine Jay is all the way from, was it the Philippines, buddy? Jay, Philippines. And it's probably 1 a.m. there now. That's crazy commitment, man. That is crazy commitment. Last year with a lady called Tanya, she was from Dubai. So the time difference was 4 hours. So I started 6:30. She would start class at 10:30. But Jay is officially the latest late nighter, starting at midnight of 12:30. Okay, cool. Yes. Colin is here. Colin, I owe you an apology, buddy, but good to see you, man. We can talk later. I delayed sending you that link, but really good to see you. Right, cool. And then we've got a couple of people from Botswana, Kenya. Mrs. Mtunes is around. Amazing. Bless you, ma'am. From Zimbabwe, South Africa. Right, it's a full house today. All right, so we're done with the introduction. That's the power I'm about to put into you. You got to master it, right? So take your time. It's not hard, right? So let's start now from the beginning. The very beginning, because I generally don't waste a lot of time breaking down what is a pip and what are Forex codes. All that stuff will come. It's really not important. This is not a baby pips course, right? Let's start from the first thing, supply. What is supply? Specifically, what is supply? And remember, I will put together a good PDF with all this information and definitions for you, right? So if you're struggling to write notes during class and concentrate and listen, I'll prefer you just listen, right? You will get a PDF with what I think you need to master from what I say, right? So it's literally done in that way so that I get more questions out of you than you just writing, and then you have to go master the stuff by yourself. Now, supply is simply the amount available. Those of you who came for the intro class yesterday, I think I used oil, right? Oil is an example why the concept of a supply is important. If I restrict supply, if I have 10 pens, but I have a classroom of 20 students, and not only am I the only teacher in this town, in the school with 20 students, but I'm also the only shop owner in the small town with this one school with 20 students, which means I'm the only one who sells pens in this town. And I only have 20 pens, but 40 students. I have limited supply of how many pens I have, but I've got lots of students, which means I can say today the price for my pen is $1, but tomorrow the price of my pen is going to be $10. I'm not worried about customers leaving. I am their only source. If I can control the supply, I can control the price. Do you understand? If I keep restricting the supply of a commodity, of a good, of an asset, what I do is I make that asset more valuable, more rare, because now everyone wants to get it. When everyone wants to get it, they create demand. So now there's a lot of demand because the product is in short supply. If you follow your cryptocurrencies, you'll notice that the cryptos that do the best are cryptos where the supply is cut, where there is a limitation to how many coins should be made, right? That particular asset will gain value a lot quicker. Now, in the Forex market, supply is the amount available, all right? What is actually available? And I want to quickly add some notes to the side here, just to jog your memory. We only sell at supplies. Never, ever sell anywhere else in your life unless it's a supply. There are 5 types of supplies and 5 types of demands. That's what module 1 will teach you. Anytime you're doing a sell, it's because it's one of the 5 supplies I've taught you. You will not sell at a resistance. Please don't do that. The banks know that. Your broker knows that. Liquidity makers know that. You will be raided. Your stop losses will get hit. Only sell at supplies. Why? Because that's where the banks are going to sell. If the banks are going to sell at a supply, we now know that the amount available there is now preset. They have put in a chunk of money, number 1. Number 2, the supply you want to sell it, where you're going to find the bank is going to honor the concept, sell high. All good supplies are high selling points. So it is the amount available. You cannot go any higher. This is it. This pen, logically, market, no one in the world is going to buy my pen for $50. The amount available is $49. That is the highest I can sell it. I'm going to sell it at $49. That's the amount there. All right, sell high. Okay. Demand is the amount wanted, and you'll understand that from that example that I gave earlier on, right? Is there literally how much people can go. So they'll try and push price up. So demand is a pumping feature, which means anytime in your life, now that you're all 365 students, you only buy at demands. I will teach you how to identify them. Put 8 weeks together. You only buy at demands. Why? Because that's where the banks are waiting. The banks have put a lot of money. I'll teach you how to read order flows. So you know, it's a retail trading area. Is it just retail traders here with all 0.01, 0.02, and their $300 US counts? Because if it is, that's probably a support and you want to avoid that. Where you want to be located is at a demand. An institutional demand where banks are waiting for their orders to get triggered, and you know they are waiting because there's a lot of money at that level to make sure price doesn't fall. So demand is the amount wanted, right? So we always locate good demands at buy low. So we want to buy low with the banks. We've got supply and demand, and we've got our concepts. Now, a simple summary: supply is the amount available at a particular price, but the demand is the amount that is required or wanted or desired. This is the relationship. There will be nothing outside of this that moves price. Markets will always seek out for this. What's the current price? Where is it right now? Where is it coming from? Where is it going? Now let's add all of this into it. What's the current price right now? Right? What is the amount available based on this current asset? Can I sell this asset for a little bit higher? If the answer is yes, I need to find that supply. Is the amount coming from a good demand? What was the original buy? What was that low buy? Because that's how you make profit. If I buy a pen for $1 and then go to a new town and sell it for $10, I've made $9 profit. That's good business. That's good margins. That's all you want to do in the Forex market. This is a business. It is not an overnight thing. It's not the lotto. Oh, by the way, those of you who've just registered, in case you want to email my team for some refunds, you do so tonight. You are not going to become a millionaire overnight. I just want to put that disclaimer in. If you joined because of that, you need to get your money back. I've never done that. I've never made anyone a millionaire overnight. This is genuinely impossible If it's possible, it's because you've over-risked, number one, and I guarantee when you come back into the market, you're going to lose it again. In South Africa, there's this hilarious show called How I Blew It, or How They Blew It. I forgot it. But essentially, it's of lotto winners. They're the guys who play the lottery, and they win 6 million rands, 7 million rands, 8 million rands, 20 million rands. And this show follows these new millionaires, and within 6 months to a year, these guys are broke up, are in more debt than they were before they won the lotto. That's the problem with money. If you don't educate yourself properly, I'm wasting my time with you. My stuff works. You will trade, you will become profitable. But if you don't have an edge over your money, over your financial resources, we'll talk about that in the mentorship. I'll teach you some stuff. Right, but I just want to be very clear. I have never made a millionaire overnight, and I don't intend to do that. Everything that I'm going to teach you is my process. I'm 365. 365 is not a corporate company that runs on education and training students so we can make money. Impossible. Look at how many you are in the Zoom room. I can't live off that number of people. I don't do intakes every month. I do 3 to 4 intakes the whole year. The last time I taught anyone was in June. Then I cut it. I just stopped, right? Because I have to run a trading firm. I have to do academy stuff. I'm enjoying producing free content on YouTube. I had a book to write. I have a family. There's no ways this sustains me. Okay? But what you need to understand is everything that I'm about to pour into you is me. I'm 365. I'm the brand. I'm the identity. It's my story. And my story doesn't start off with me making $1 million overnight. It was a painful process, right? And as we get to know each other, you will see my trading strategy won't make you $1 million overnight. Most of you won't even start accounts that have enough capital to turn over $1 million. It's crazy. Retail traders really use the market as a lottery thing. And guys, just so we're clear, any trade that you lose, it's not your broker. Your broker won't benefit from you losing. Just so we're clear, I follow a lot of Forex groups on Facebook. I see a lot of misconceptions. Your broker makes money when you buy, when you sell, when you win, when you lose. Okay? It really doesn't matter. They're charging you commission, swap charges, and they're very small, but there are millions of traders. So it's a very profitable thing to be a broker. However, when you lose a trade, this is how you need to perceive it. Nothing to do with your broker. You need to tell yourself there was a better trader than me that day. If I buy Euro USD and my stop loss gets hit and I come back tomorrow and Euro USD is not buying, it's going down, there was a better trader on the other side of my trade. Tell yourself that. Your goal is to become that person. Your goal is to understand what did that other trader, wherever he was in the world, see? Because trading for retail traders, for banks, I told you, it's your politics, it's the exchange rate, it's import exports. It's if my country buys food from China and exports it to Africa, what's the best exchange rate? How does that economy benefit? How does the Australian GDP stay up because the Chinese government is very productive? How is Canada's currency going to be propped up by oil? That's what Forex is. For retail traders, it's a different story. Trading is the transference of wealth from one account to another. When I lose money, I know I'm losing money to a better trader. Someone was either more disciplined than me, understood what was going on better than me, saw something that I didn't see. And that's your journey. You have to sharpen. That journey will not make you $1 million overnight. You will become profitable. You will make a lot of money, but it won't be overnight. And if those are your expectations, you got to change them immediately. Right. So long story short, supply and demand is what I've explained so far. Our starting point tonight, and like I said yesterday, is there are 5 types of supply and demand. 5 types of supply and demand. And then unfortunately, they're not well understood and they're not taught generally. Now you'll find a lot of material around supply and demand on the internet, I'm sure. But what I'm teaching you is institutional supply and demand. Now, our first type of supply and demand, and we're going to call it supply and demand number 1. And you're going to have to remember all these rules. It's not hard. I'll repeat them. I will build them. We're going to go through charts every night. By the time you're done with the course, you will have seen every single Forex pair there is. You'll have seen all the golds, all the silvers, all the commodities. By the time you're done with 8 weeks, you will see this thing work across the board. You will use the weekends to back test what I say. And on Tuesday or Monday, our first 30 minutes of class will be for you to tell me I lied. I want you to find the lie. I want you to call me out. I enjoy that kind of stuff because it means the student took time to go look for stuff. It's never happened. No one has ever come back and shown me where I've lied. That's because it's so obvious after you understand this information, right? So number 1, the first type of supply and demand that you need to master is called major turning points. And we're going to spend tonight and probably tomorrow around major turning points. It's not just the first supply and demand. This is where supplies and demands are created on your charts for a very long time. And when I say a very long time, I'm looking at a 10 to 12 year span. Remember, my thesis to you, my argument to you is price is not random. Number 1. Number 2, banks plan this stuff. Number 3, imagine if markets were random. And I say this because retail traders believe price is random. Number 1, retail traders believe nobody knows where price is going. Nobody knows. You can't know. Sometimes they know they're lying, right? Now, imagine a world where we don't actually understand the mechanisms that control our import infrastructures and export rates. That we just don't know. You're in the Philippines, you want to come to South Africa, you don't know how much money to carry that you're going to convert into South African rand. You just don't know. No one knows, right? That's just stupid. But stupidity prevails in the market space, unfortunately. Major turning points, supply and demand number 1, help us map out this long-term plan. Now, what's the long-term plan? I told you yesterday, I'll tell you again. Banks think in 3 months, which is what we now all like to call financial quarters. We are now in the last financial quarter of the year, right? It's a very important one. Banks think in 3 months. There are 4 financial quarters in a year. Banks have a tendency to have 1 year profit targets. So they like to take profits in their positions after every year from the time they open them. It won't be a complete take profit, it will be a partial take profit. But partial take profits for the banks are enormous. Please note, major trading firms, banks publish their Forex trading results on the internet for free. Just type it. Just type Goldman Sachs. This is a thick report, but if you want to read that stuff, it is there online. They'll tell you the position. You can see the net sizing. You can see the Bank of England holding 15 billion euros on USD cash for whatever reason, right? And it could be for countermeasures. It could be for import measures. They explain everything. Private firms, Goldman Sachs, JP Morgan, publish their reports annually and quarterly. Okay, all this stuff is out there. So you can actually see this 1 year profit target happening, but it's not in isolation. All of this is happening in a 10-year span, although some charts you see will move to about 12 years. Understanding supply and demand number 1, major turning points, is understanding all of this, is understanding the trajectory of what the banks are doing and the entire trajectory of that asset. So that's what we're going to do tonight. We're going to do a couple of examples. Okay, cool. So all the yeses are in. Fantastic. Everyone is with me and no one is watching Netflix. I appreciate that. Right. So we're going to look at that right now. Major turning points, supply and demand number 1. So let's just switch over to screen 3. Right, let's move away from Bitcoin for now, and we're gonna come here, right? So while I do this, those of you who are new to TradeView, when you sign up, I don't know what the default chart will be, but if you wanna look for an asset, any asset, this is the search box. Now you can search it on under all, which I think would be just easier because some of you might be so new, you're not even sure which assets sit where. What's a stock, what's a currency, what's what. So you just come to all and then you type what you're looking for. I'm going to be quite specific in our classes, and I'm going to start off with Forex. I want to go through as many Forex pairs as possible. What I'm doing is I'm going to teach on these charts all the time, and I want you to see it happen all the time. You're going to spend time over the weekend going through what I've just done with you all the time. Do not think that is wasted effort. You are building confidence in your trading strategy. Leroy loves to disappear. Leroy, after an 8-week course, misses his family a lot. There's a supper time right now. I'm not gonna know what happened at school today from my grade 1 little boy. He comes home around about 5, tired, and I'm preparing for class. I generally discover new things that my little girl is doing because I'm very busy. I do 16 to 18-hour days. So after the course, I might need 2 weeks off. So use this time with me, please. Backtest everything. Do it so that you are confident to execute a trade in my absence. All right. If something goes wrong in my family and I need time to take care of my family, I will take that time. If my partner comes to me and says, look, I'm tired, I'm a tired mom, yada, 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 we need to go on holiday like we did last time, I drop everything and I take it because if my rock, she's my rock. If my rock is shaken, I have no foundation. I know, and she looks tired now already. She looks tired. I need to spend time with that pretty lady. And so my point is I can disappear from your life after the course, right? Not during, but after the course. And what are you going to do? You can't wait for someone to come save you. That is not the game of trading. There is no Moses. It's your capital. It's your account. The only way to get scammed is to give someone your money. So you need to be in a place to understand this stuff, right? So the first asset I see here is Euro USD. I've been filming all my live trades in a series, how to 5x, 2x, 10x your trading account. And I really enjoyed playing with Euro USD. So I'm just going to click to Saxo. These are all brokers, right? FXCM, Owanda, blah, blah, blah. These are all brokers. They're supposed to show you something similar, but I'm going to go to a chart that I don't use for trading, but use for teaching. Right, rule number 1 when doing major turning points. Once you find your chart, Euro USD, whatever it is that you want to trade, the first thing you're going to do is you're going to click on here, on M. And I think for you guys before, let me see what it looks like. So without the stars, this is a program, right? So it will look like this. There'll be maybe H4 here or 5 minutes or 30 minutes. This is your time frame. When I talk about time frames, I'm talking about here. You're going to click on whatever is there and you're going to scroll all the way down until you get to 1 month, right? So I'm just going to put my stars back because these are the time frames I use, right? You're going to click on 1 month. Guys, you are stuck here. You and me are not moving from the monthly time frame for the next 2 to 3 weeks. It's going to be exciting tonight. It's going to be fun tomorrow. Next week, you're going to start to get bored. Fight that. Get over it. This is the most important Forex chart in the markets. Retail traders don't go beyond the 4-hour chart. Let me show you the 4-hour chart. Right. So look at the difference. Most 365 traders who are taught and are good with following rules know we start here. Retail traders skip this, skip this, skip this, sometimes skip this, and they are here in the 5, 15 minutes to 1 hour time frames. All the information, the order flows, the money, the banking positions is embedded on this time frame here, the monthly chart. This is fundamentally the absolute most important time frame. Do not take this lightly. There is no moving forward in the course for the next 2 to 3 weeks. We are stuck here. We are going to locate all 5 types of supply and demand on the monthly first. Because when we start to drill this information down to smaller time frames, it's going to get very complicated. Here, there is no one. It's just the banks. It's just private institutions. It's just hedge funds. The lower you go, you're going to start to see everyone's trading strategy start to create commotion. You're going to find support and resistance. You're going to find the RSI, overbought, oversold, MACDs, the moving averages and the correlations of them. And it gets very conflicting. And you're also going to find the banks inside those small time frames, but you're going to find different types of traders. You're going to find traders like me who are swing traders. We like to stay in one asset for a very long time. So I hold prices. My longest hold in general has been 6 months. My first longest hold was 365 days. This was after 3 to 4 years of losing in the FX market. And I finally understood what I did the right course, gathered information, lost a lot of money. And when I finally understood supply and demand, I decided to open one position and hold it because I could tell I've been taught finally by the right people that you can predict where price is going. So I told her, I'm going to open one trade. We're going to hold it for 365 days. And I spent every single day, 365. That's why it's called 365 Trading Academy, to explain it to you. I spent every other single day that year while I was holding one trade, back testing. Going, if I buy here, marking my zones, making notes, really trying to make sure I've mastered the process. And that one trade that I held changed my life. Got us out of debt, blah, 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 blah. Finally started to see a turnaround. Right, so that's why it's called 365. It's my process. Remember, I can't make you a millionaire overnight because I didn't do it. What I saw was a good process. So we've got an 8-week course and we've got a mentorship program that runs for 365 days to start to build your accounts, right? And that's how we do things. Now, on the monthly time frame, this is your, I almost used a dangerous word. This is your alpha. This is where you start. This is your omega. This is where you end for now. The monthly time frame is an interesting time frame. Now you see these things here, red, green, red, green, red, green. If you've never traded before, these are called candlesticks. Now candlesticks are a fascinating thing. Candlesticks are simply a representation of price. So they are simply showing you you know, the structure of price. Green means buy, red means sell. On the monthly time frame, however, it's important to remember that one candlestick like this, let's talk about this big red one here. You see, if you look all the way down, TradeView is very good. It's very detailed. You see there it says 1 June 2021, just look vertically down there. That means this one big red candlestick represents the entire month of June. So the entire month of June, it was a sell, basically. If I open the entire month of June this year, this big red candlestick right here, if I open it on smaller time frames, if we go to June right now, you'll be so shocked how many green candles are there. On the monthly, it's just one big red candle, right? But I'm pretty sure there's a bit of buy. Okay, I've just added someone. Okay, thank you so much for meeting yourself. Cool, welcome. Right, so I'll say big red candle on the monthly, but if we do this, let's isolate price so you can see it. I'm just gonna cut off all these recent months. There we go. So now we're just focused on this red candle, right? I'm gonna make this chart big. We're just focused on this red candle. I'm gonna put a rectangle around it. This is the month of June 2021. I want you to see something. Unfortunately, my rectangle is gonna cover a little bit of the green candle. Let me see if I can change that. Not really, but yeah, okay, fine. Let's draw a vertical line. So then I don't want to cheat. I want us to really just focus on the green candle. So, well, even that screws us over. Right, it's fine. We'll make a plan. Right, I'm gonna start to drop time frame. I'm gonna go to the weekly chart. Now, one candle, remember 1st of June is here. So this is 7 June, 14 June, right? Going by weekly. So if I can adjust this now, surely, beautiful. So now we've got almost everything in one colored area, right? So let's make this yellow. Please kindly mute your mics. And then if you want to ask anything, just type it out, please. Thank you. Right, so there we go. So you already on the monthly, we saw one red candle. When I drop down to the weekly time frame, I'm starting to see, yeah, but on the 21st of June, that was a good buyer's week. Okay, let's go to the daily time frame. I love the daily time frame. Now on the daily time frame, I'm gonna see one candle represents 1 day. So this is the 25th of May. Let's move it a bit. We want to get to 1 June. Where's 1 June? Right, there we go. So the start of the month of June is here. And we can see there were a couple of good days to buy. 1, 2, 3, 4, 5, 6, 7, 8, 9. There was good 9 buying days. Yes, most of the time market was selling, but there were times where people could buy. I would advise you never become those people who were trying to buy something so obvious that the banks were selling. And we'll talk about that now. Right. So this is where the confusion comes from a lot of retail traders. They start playing on smaller time frames, ignoring the bigger picture. Let's complicate it one more time. Let's go to the 1 hour time frame, which is very popular with retail traders. Now look at how many green candles are there. All of this is like the 9th of June. This big green candle here is the 4th of June, and so forth and so forth. Now you can see that while other strategies will be shouting buy here, sell there, there are some people who are zooming out to see the bigger picture. And the bigger picture is quite simple, 365 traders. All you had to do was to buy here, sell and take profit there, which means all of this could have been your money. That's a swing trade. I'm going to teach you how to do that. There is no such thing as you can't stay in the market for more than 3 days. A lot of people are not disciplined enough, right? That's why all of you, I believe yesterday, those of you who came for the introduction class, I believe in my heart, you have already started enjoying chapter 1 of Mark Douglas's book, The Disciplined Trader. Those of you who joined today, I will email it to you. All right, so now let me quickly clear this up. Boom, right, so this is the full chart. The first thing you do when trying to identify major turning points. Moving forward, all I'm gonna say is, what's your MTP? I'm gonna ask you, what is the MTP? Major turning point. Major turning point can only be found on the monthly time frame. There is nothing, there is nowhere else you will ever be able to locate the major turning point in price. You must start off by identifying the major turning point in each chart. Major turning points are supply and demand, number 1. The first thing you need to do is find the asset, go to monthly. After that, I need you to zoom out. Make this candlestick small, adjust here by the side, zoom out, zoom out, zoom out. Right, it doesn't have to be too small, but what you need to do is you need to be able to see the start of price and the end of price. Where did price start? Where is price right now? You need to be able to see everything. On the left side of TradeView, for those of you who are new to the platform, these are your tools. You're just going to have to familiarize yourself with it. Thank God you'll be using your weekends, right, to back test stuff, so you'll get used to TradeView. I'm going to click here. I'm going to get it on a horizontal ray. You can use a horizontal line, but a horizontal line for me is always so untidy because it draws across the charts, and I've got OCD. I don't like that. So I'm going to use a horizontal ray. A horizontal ray will draw across the charts based on how far you move your cursor. So I'm just going to start here and look at what I'm doing. I am locating the absolute highest point on this chart. I want to know where is the highest point. I'm looking at Euro USD. I don't care what month or year it was. I want to know when was the highest point on this chart. And it seems to me it was in 2008. Anyone remember what happened in 2008 in the Zoom room? Anything about 2008 in the markets or in the world that you remember? Unfortunately, I won't wait forever. Going once. The Big Short. Yes, Jay, correct. The Big Short. Yeah. Essentially, it's called the Big Short, the market crash. Exactly. And guys, just so we're clear, it's not the financial market crash, Colin. Exactly. Thank you so much, guys. And I just want to be clear about these crashes, right? Because a lot of people go, crypto is crashed. The markets have crashed. Oil has crashed. These are banking crashes. JP Morgan was fined I think it was like 10 billion US dollars at some point in 2009, 2008, and other very big financial institutions for triggering the crash. Now, the term crash has negative connotations. It does not mean everybody lost money. Banks made a lot of money inside their own crash. Now, long story short, they created home loans, gave home loans to people who can't pay, called back the home loans, sold the bonds to companies for profit, knowing that those companies couldn't get returns, and created chaos, and there was a crash. Right? So this was the big short, big financial crash in 2008. And it so happens to be the highest point on this chart. I find that interesting. I find that interesting because over time, you're going to notice a pattern. You're going to see that, wait a minute, the highest point on this chart is during the big crash, Euro USD. And then you're going to start to wonder, I wonder what the highest point is on pound USD. Could it be the same? I don't know. This is my monthly time frame, pound USD. Ignore everything else on that chart. If we're to do the exact same thing we did right now, which is to draw a horizontal line at the top, look at that. Financial crash, 2008. So now I've got two trade ideas. If I open another trade, I can find the same thing, and another one, and another one. But they are going to be a cluster of trades that did the opposite, right? And we'll talk about all of that, right? So let's go back to our first chart for the night. Euro USD, checking on time. Beautiful. We still got a lot of time. We still got a lot of time to do this, right? So I'm going to go back to a broker with less notes so I can make a mess. There we go. Right. So that's the first thing you do. You want to locate the highest point of that chart and make sure your horizontal line runs across it. In the same breath, you want to locate, and sorry, I'm just going to click here so you see everything horizontal ray. You want to locate the lowest point. So if I draw this here, unfortunately, it makes sense as a support and resistance trader, but it's actually, I want to literally capture the lowest point. This here for me is the lowest point, right? So I've now got my highs. I've got my highest point, lowest point. I literally can tell the long-term journey of this chart. Now for tonight's sake, I'm just gonna write stuff down for you. This is 1st of April, 1886. For this broker starts to show us where price started to move in 1986. Up here, like we've already discussed, up here is our highest touch. This is 2008. Right? Down here, where our lowest touch is, this is the year 2000. I'm just writing stuff down. Don't mind me. It's quite interesting. This is the year 2000, right? So now I know a couple of things about my chart that I like. I like the fact that I understand where price was its highest, and I like the fact that I understand where price was its lowest, and I kind of know where price kind of like started. All right, so this is Euro USD, and we're doing major turning points. All you need to do after that is locate. Naturally, the highest point of your trade will automatically become a turning point. I'm going to explain all of that in a second. Now, when I draw supplies as Leroy, I don't like using the color red. Red has negative connotations for me. I might use red for a 3-month chart, which you guys won't have access to unless if you pay the pro account, but we'll talk about if that is necessary at another time. So all I'm doing is I'm drawing a yellow zone where my highest point was, the highest, right? And I'm noticing something interesting, which I hope you can see for yourselves here. Price was coming up for whatever reason. And for whatever reason, crash, no crash, it doesn't matter, price turned. That's all I care about right now. Remember, supply and demand, number one, major turning points. I just want to see the major turning points. When I say major, I'm referring to the monthly time frame. If price turns on a monthly time frame, it's super major. It's a big deal. But there are only two types of majors. The majors that exist in supply and demand is the highest turn. So price was going up, 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 the highest turn, and it turned down. And also this turn here. All of a sudden, markets were going down, 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 down. Give me a second, I'll draw it for you. You see here, All of a sudden, markets were crashing or going down, or it was a downward trend. I don't know, we don't care. And then all of a sudden, markets start to turn for the upside. These are the only two major turning points that exist. There are many turning points in this chart. Don't get confused. You see here, what price stopped, turned, right? There are many turning points. I can go on and on and on. There are so many turning points, but at some point in time, none of these turning points are a big deal like these two. Why? These two are the highest and the lowest in the chart, right? So I'm hoping so far I'm making sense. Bear with me. Week one by nature is fundamentally slow. It's supposed to be slow, right? But you need to soak this in, because if your analysis does not, my dogs are making so much noise tonight, I apologize. If the analysis doesn't make sense here, you can't move forward. You can't go find an entry on the 15 minutes chart. You're not doing what the banks are doing. You only understand what the banks are doing, starting with locating your major supply and your major demand. So I'm going to draw a rectangle here now. I am going to draw a rectangle somewhere here. And my demands are always green. Remember, supplies are always at the top because I want to sell high. Therefore, my demands are always at the bottom because I want to buy low. Sell high, buy low. Sell high, buy low. Simple maths, right? So I'm going to start making stuff big, and I'm going to start to tighten this rectangle. I'll explain tomorrow how we draw these rectangles. These are not rectangles per se. We call them areas of value. Wherever price turns, it creates an area of value, AOV. So if you see my students talking, they'll be like, yeah, man, Euro USD is by that AOV. This is what they're talking about. There's a specific area of value that we're looking at. Inside our areas of value, we must qualify if we have a valid supply or demand. We must qualify them. So right now, what I have is major turning points. And what I've done, I've drawn my areas of value, my rectangles around them. I'm still to qualify them. I'm still to decide for myself if indeed this is a supply or a demand. But now let's just look at this thing quickly. And let's just talk about what we spoke about when class started. I said you're going to need to know two things all the time. Where is price coming from? Where is price right now? Where is it going? Price left a demand in the year 2000 and went all the way up to what seemed to be 2008, and then revisited that area somewhere here in 2009. Right? Can you see that there? I'm not making these numbers up, and the dates are right down there. I'll say that again. Price left a major turning point demand after slightly falling for a while. We'll go back there. We'll go back and check the dates there. But from 2000, it was going up. It was a bullish asset. It was a good idea to buy the euro. Euro was stronger than the dollar. It was going up. That's what it means. When something is going up, it means the euro is stronger than the dollar. It was amazing. But from 2008 to 2009, something happened. There was a major turning point. The fundamentals, the experts, history tells us there's a market crash. Sure, that's fine. We don't care about that right now. The point is something happened where price has started to turn. And if you look at price from this angle right now, it seems like price is in a direction to keep going down now, for whatever reason. Now, I say to you earlier on, in the beginning, banks think in 3 months, have an annual 1-year profit target in a 10-year plan. That's what I say. So let's look at this closely again for the last time, because it's very important to start to understand this. My job is to make sure I first of all convince you that markets are not random. You can't master something that's random. If something is random, the very definition of random is it's like luck. Sometimes you have good luck, sometimes you have bad luck, right? If markets are random, markets are luck, then you just gamble. I don't think this is a thing about gambling. I think there's a plan. And I think if we spend time studying these charts and the banks, we can understand the plan. Once we understand a plan, we can master it. Banks think in 3 months, take profits in 1 year, in a 10-year period. The year is 2000. It's the internet boom. We'll talk about that another time. But NASDAQ is created in 2000. Silicon Valley in America and all these guys creating these technologies, Facebook, blah, 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 blah. There was a massive internet boom in 2000. Europe becomes super strong. Woo! It's pumping. 8 to 9 years later, the plan changes. Banks think in 3 months, take profit in 1 year, in a 10 to 12-year plan, almost 10 years, and all of a sudden, we have a crash. We have a cool down. Oh, we got to slow down. Markets are going a bit too fast, and we start to crash to the downside. And this euro pair, to me, it seems like it hasn't really recovered. Because remember, this is what a recovery would look like. It would go back and say, this was the highest point on this chart in 2008. Markets must come back up here. If I want to recover euro glory, euro strength against the dollar, I need to see the bulls, the buyers push price to these glory days, right? Instead, we're seeing the opposite. We're seeing an almost 10-year bull run come to an end. And then now 2008, let's find 2018. There's 2018 here. And then markets continue all the way down up until 2020, COVID. And then markets start to go back up here, right? And I'll explain everything I'm doing. Now, this is the next 10-year plan. You see this here? The slow push here. And all of a sudden, if you add 10 to 12 years from 2008, you get 2020. Now, I'm not a conspiracy theorist, and I really don't have time. I'm also not a kid. I am predominantly a rational human being, I think, and that's because I read a lot. Now, whatever you think about COVID, that's your personal opinion. I'm not going to get into that stuff. I'm not going to get into who made COVID, why did they make COVID? I don't care. Just get vaccinated, you'll be sharp, okay? I'm simply saying Euro USD and Pound USD, NZD USD, AUD USD, there are a lot of assets that look like this. The major turning point suppliers in 2008, they've done a 10-year bullish stretch and a 10-year, they've completed a 10, remember 10 years here is 2018. You add the 10 to 12 years, you're in 2020. It seems to me that it felt like on this chart, on many charts actually, that in 2020, something needed to happen. Something needed to shift the flow of money because the banks were done with a 10-year plan. Now, retail traders love things called trend lines, and I'll teach you how to correctly draw supply and demand trend lines. I'll teach you that stuff later on. When you draw your trend line, you will get an effect that looks like this. Some of them will want to draw a downward channel. All of this is just showing us that price was definitely going down. This is public information. Warren Buffett in 2008 put in 1.8 billion US dollars, Euro USD sell, and he's still holding it or came out last year, I don't know. But he held that trade for 10 years plus. Banks did the same thing. It's not just a Warren Buffett thing. If you're an institutional trader, you knew Euro was about to bleed, right? We'll talk about that another time. But just so you know, because people are looking at this downward channel, something about the end of this 10-year structure, 10-year plan, 2020, and needing a big shift. There was a big commotion in the market. For me, it seemed that commotion came from something called COVID, because if you remember, COVID goes global on the 17th of Feb as just one case in China. And then by the 23rd of February, it's over. You need to shut down this Wuhan or something district, I've forgotten. And by the end of February, United States, England, UK are shutting down their borders. And if you remember, February is the shortest month of the year. By the 1st of March, there is just global panic around COVID, starting in Italy with the number of people dying. I'm in South Africa, so my slow South African president, who's not even my president, By the 23rd of March, there is a lockdown, even in South Africa, Africa, Zimbabwe follows, Nigeria, etc. I find it interesting inside the Euro USD chart, and you're going to find the same setup on Pound USD and all those other assets that I say, that this candlestick here is the 2nd of March. You see this there? 2nd of March, this very long, weird candlestick. It's called a doji. That one there in the middle, that long candlestick, that's the 2nd of March. I find that around the 2nd of March, all of a sudden on this asset and a lot of risk-sensitive assets, risk COVID is a high risk, that there is a lot of pumping to the outside, almost as if it's initiating a change of plans. I find that interesting. I find it interesting that in March 2021, this year, let's find March 2021, there's a big red candle. You go back test this tonight. Go to these assets tonight and see for yourself. So on the 1st of March, there is a bullish impulse move in 2020. I'll teach you what those are. And on the 1st of March in 2021, there's a big red candle. Nasdaq did the same thing. All your company indices did the same thing. They're all risk sensitive. Your stocks did the same thing. They're all risk sensitive. The only people to have a lot of money to buy in the middle of a pandemic are people with the power to print money. Money Heist season 5 is out. We are there. If you watch Money Heist, you should understand this. They explained this concept in season 1, that the banks will arrest you for printing money in your bedroom because it's illegal, but they do the same thing. There's a lot of buying right at the epoch, at the height of a financial crisis. And after a year, banks think in 3 months, take profit in a year. There's a red candle there. On the 1st of March 2021, 1 year later, they use that month as profit taking. You can see it's profit taking, right? Price literally drops down. All the buy orders are cleared, and then the trend continues. This is the kind of stuff we need to start digesting. All right, tonight, this is what major turning points do. Major turning points, if I can just quickly remove everything and redo them with you. Guys, please. I love this stuff. I talk and talk and talk. If I'm too fast and you're not understanding, you have to talk to me in the Zoom room there. If I see nothing in the Zoom room on the chat there, I'm assuming we're good. So are we good? Can we do a temperature check? Are you guys okay? Are you guys watching Netflix? Am I by myself? Are we good? Yes or no? Temperature check is so far. Am I coming across clear to you? Because if I lose you today, it'll take me forever to find you. Okay, we've got one person. We are, Mr. Tunzi, bless you. Thank you. All right, cool. I'm coming across clear. Jay, you're still awake. I think it's like 2 a.m. in the Philippines there. It's a gift call. All right, fantastic, guys. Thank you so much for the feedback. Right, cool. So I'm coming across clear. That's amazing. Right, so I've redrawn our major turning points. Thank you, Yasha. Fantastic, fantastic. I'm going to redraw them. Please, it's just the highest point in the chart where price turned. If you just draw the highest point and it doesn't have a turn, you don't have a major turning point. There'll be a few weird charts like that where price right now is at its highest point, but it hasn't turned. That chart might not have a major turning point. Your currencies are fine. The stocks and cryptos, slightly different story. So right now, I'm drawing major turning point number 1, major turning point number 2. I've just given you a simple example of what's happened on this thing. Number 1, number 2, major turning points are the first base place to actually start to draw a GPS of where price is going. Now, I told you the rules. If price leaves a demand, it's going to a supply. If price leaves a supply, it's going to a demand. It doesn't matter what the prophet, Forex guru, or whoever is on social media making noise is saying to you. It doesn't matter how many zigzags it'll take to get there. Price leaves a demand, it'll go to a supply. Price leaves a supply, doesn't matter how many zigzags there are. It'll go back to a demand. And this is where we start to plot our trades. We don't get direction of a trend from any other time frame than the monthly. So moving forward tonight, guys, when I say let's start with the monthly time frame, I'm going to start using a term. I'm going to call it governor. Yesterday in my introductory course, I told you that the people in charge of the markets hold very high ranks in the government. And those ranks are specifically called the Reserve Bank Governor. Reserve Bank Governor is a couple of powers. They can change the monetary policy. It's not important to know all of this stuff, but this is where the exchange rates are done, the interest rates. Monetary policy regulates interest rates. If you have a bank loan, home loan with a bank, the governor can say we are dropping the interest rate by 25 basis points. That's monetary policy. No one in the country can do that. Is that for me? Okay, I'm just gonna mute our brother there for a second. There we go. So no one at all can control that except the governor. They control monetary policy. The Reserve Bank governor of every single country, in your country, my country, also controls what is called fiscal policy. This is where they lie to you and say the government is going to do a good job of spending less, we're going to privatize, we're going to build schools. Fiscal policy speaks about the austerity measures or the budgeting of each government, each country's blah, blah, blah. It's linked to the Minister of Finance's portfolio. Long story short. We are going to borrow all those terms and we're going to start calling our monthly time frame the governing time frame. This is important. The monthly time frame is your governing time frame. I'm about to switch screens, so if you don't see my whiteboard, something has gone wrong. If you can't see the whiteboard right now, something has gone wrong. I've switched screens. Now, the monthly time frame, we call him or her, you know, all power to women. Monthly time frame is our governor. It's our governor. It's our governing time frame. This time frame is extremely important. It governs the following. Number one, the trend. You know when they say trend is your friend, if the trend isn't coming from the governor, don't jump on that train. You will get screwed by the bend. It governs the trend. Number two, the monthly time frame governs the flow of money. This, guys, is all we care about. As traders, we want to make money because we're risking money. It's the only job in the world. I used to have office jobs. When I was growing accounts, I was working 8 part-time jobs at my university. And then I became a contract lecturer, which helped with the pressure. But still, I used to look for money. We all want money. But in my part-time jobs, if I messed up, if I was too tired to go to work, if my eyes were sore because I spent all night reading or watching markets, I would go to my boss and my boss would say, Leroy, don't do it again. And I'll say, sorry, boss, I understand. And I'll get paid at the end of the month. I get a salary. Fantastic. The markets are different. We get to risk a big part of our cash, right? And we also lose it. And we lose it at the scale of how many mistakes we make. It could be mistakes in direction, mistakes in risk allocation, mistakes in trend reading, mistakes in areas of value, which we'll break down tomorrow, right? Big thing. And the way to start to slowly slow down the bleeding in your losing streak in the markets is do only what the governor is doing. Your governor is your starting point. If your governor is buying, buy. If your governor is selling, sell. Do not care about what's going on in a fractured way on the smaller time frames. And then I'm saying that loosely. Let me build the rules first, then you understand what I mean. All right, so it is a flow of money. And I'm talking about banks. This market currently right now makes about $6 trillion a day. A day. There are only 8 billion people in the world. The market makes $6 trillion a day. Right? Poverty isn't the end result of lack of resources. Poverty is the direct link of a capitalist, profit-driven dominating system. There is enough money for everyone per day, literally. Now, how the banks extract value in assets and how they move around this money is they are going to slowly split these massive orders. They're going to split them into short terms, medium terms, long terms, super long terms. All right, let's give you a practical example. Let's say 365 Trading Academy, I explained to you guys yesterday, so that, because I already started to see some inboxes, not from you guys, but from other people asking us to trade for them. We do not trade for individuals. If you see anyone saying 365 Trading Academy is flipping accounts, send your investment to me now, it's a scam. I hate that stuff. Individuals should be empowered to run their own finances. All right, we do not do that stuff. We do it for companies, but we've got a lot of rules for that, and we're fully booked up until next year anyways. All right, now, but let's say 365 Trading Academy was looking for an investor. So not the Academy, it will be 365 Corp, because that's the one we use for trading for corporates, right? 365 Corporated was actually looking for investing clients. And in South Africa, I'll use this example because I'm in South Africa. Let's say my local branch, Standard Bank, there's a bank called Standard Bank here. Let's say, Don't Die. Don't Die insurance company. The insurance company called Don't Die that I just made up. Let's also say there were 3 NGOs who wanted our services. What are our services? We take little money and we make it a lot. Simple, right? Now, the banks are probably going to give us an order. They're going to say, look, man, given the fact that we're in South Africa, given the unemployment rate, given the strength of the dollar, the weakness of the ZAR, the policies, blah, 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 we think ZAR is going to weaken over time. So we actually think you should probably buy USD ZAR, right? And so what they're going to do is they're going to give me, I'm going to make exaggerated amounts here, right? I don't have clients who give me this type of money, please. But I'm just making an amount. They're going to give me 10 million US dollars. Standard Bank. Going to give me 10 million US dollars to spend. They're giving me 10 million bucks as seed money. My job is to multiply this for them. That is every institutional trader's job. And Alan Gray as a flow trader, that's literally all we did. You get seed capital, lose little, make a lot. That's the rule. Now they give me 10 million bucks. And let's say Don't Die insurance company is a small insurance company. They give me 2 million. They don't tell me where to put it. They just want me to grow it. And let's say our NGO gives us about $1 million US dollars. So it's 365 trading account, firm, whatever. We are starting off with about 13 million US dollars as a hedge fund company. And this is our clients' money. I want to make 50%. So I'm going to ask for a 50% profit split from my clients. That's how my contracts are. But I also need to make certain targets. So I can only split 50% with you if I grow this to 40 million. I keep 20, you keep 20. You'll have made 7 million, which you would not have been able to do collectively without me. The banks will have made a bigger part of that chunk, etc., etc. Just making examples here. Right. Now, along the way, I need to decide. Let's say I'm a market maker. I'm talking from the position of a big bank, a big hedge fund. What these guys do is they're not going to dump $13 million tomorrow. Like, we got it, let's just buy. If you do that, all you're going to do, all we should see in the markets is this, just straight lines. Because you're dumping the whole thing. You're creating a strong order flow. Right, so this is where the term order flow comes from. Order flows, we are tracking money. This is the money, right? So no bank, no hedge fund is going to take all their capital and dump it on one move. This would create such a strong euphoria movement in the market. It'll be basically NFP every day, right? Like just strong impulse movements, right? Hardly any types of corrections, just explosions. This is easy to read. A retail trader can see this happening and just start to buy here. And I can buy there, and I can buy there, and you can buy there, and we just make money along the way. Unfortunately, markets don't work like that. But also think about it this way. The opposite is equally true. What if it's a sale? What if it's 365? We say, actually, we're going to take this capital, and we believe, because no client of mine is allowed to tell me where to put the money. If they think they know better, they should do better. I decide where I'm going to put the money. So if I decide, yeah, I could buy USD ZAR, but actually, I heard the other day that there's a company in South Africa struggling. They're just struggling, man. Sasol, the oil company is just struggling. They fired their head trader. Now they can't hedge. It's an oil company. They're being silly. Oil is not doing well. What if we just sell all our shares? Let's just literally buy short puts just to resell them, buy low, sell high. We'll make more money there. It's a safer bet. Imagine if I take 13 million US dollars worth of shares and just sell them all at once. All you will see in the screen is what we call a market crash. I'll crash the market because this is violent. It's too fast. It's too flowing. Not everyone can get in. Therefore, we can't make a lot of money because only one big player is pumping the markets down. Markets do not work this way. Markets work in a constant flow of zigzag. This zigzag is why retail traders lose money all the time, because the zigzag is going to produce itself in a very specific pattern that is going to allow most strategies to try and read it. Some are going to see buys while others are seeing sells. Some are going to see buys while others are seeing sells. And this painful process will continue for months and weeks and years as retail traders lose money. I'll show you what I mean right now. There are two things going on right there. Let's make this green. Let's make this green. Guys, hold on. Just 30 more minutes. I know some of you, I can feel you're yawning. I know. You want to sleep. You want to have supper. Me too. I'm hungry. I never eat before class because I'm always prone to the itis. So I'm scared I'll pass out. All right, so the other colors are looking weird here to me. That's not a problem. We'll just keep everything black. Remember, demand is buy low. So all our demands are always at the bottom and our supplies are always at the top. More importantly, let's tie it together. Remember, we're talking about major turning points. There's a major turning point demand here down there, which means maybe in this example, to make it a turning point, price was coming down. And then all of a sudden started to turn and go up. And this, in the same breath, is a major supply. Right? This is a major supply up here. Okay? Price was coming up, down, or whatever, and then price turned right at the top there. So I'm going to say supply. I just want to get the black because it's been weird. But it's not just a supply. It's not any type of supply. It's major turning point number one. Supply and demand number one, right? It's a specific type of supply. Now prices are right here. Now here's the problem with the markets. Retail traders at some point here are going to see support and resistance. Okay, they're gonna see, and if you don't know what that is, thank God. Really be very proud of yourself. If you don't even know what support and resistance is, just don't even worry. It's just a popular trading strategy. Moving averages, by the way, are built to represent dynamic support, dynamic resistance. It's all support and resistance. RSI indicators, when they're telling you something that is now oversold or overbought, it's because price is now arriving at an area of value where there is a lot of selling and a lot of buying next to a support or resistance. All these things lead to the same thing. There is going to be a lot of commotion during the zigzags on any time frame, monthly, weekly, daily, 1 hour, 5 minutes, 10 minutes. And this is where accounts get blown, because what the banks would do is, first, they'll create the trend. The trend is created here with the orders. 365's got 13 million. What am I going to do as the head trader of the Academy? I'm going to be smart. I'm going to create a split account. Number one, a split account is an account that separates my money from my client's money. And inside that split account, I'm going to put my client's money in there. I'm going to start to split it, right? How do you eat an elephant? Slice by slice. I'm going to take 5 million of the 13 M. All right, I'm going to take 5 million of the 13 million there, and I'm simply going to split it, right? 10 plus 8. Good, we're doing well with time. And my first 5 million, I'm going to use buy. I'm going to use it to buy. So I'm going to buy, keep everything black. Keep everything black. I apologize. It looks weird on my side. I don't know if it looks clear on your side, right? So I'm going to buy Euro USD, whatever it was, for $5 million US dollars. Here, I'm a market creator, I'm the bank. I create the trade. So all of a sudden, this first impulse that you see is literally $5 million US dollars. And maybe it was just up to here. And then all of a sudden, when 365 shoots here, $5 million US dollars, then now you know, before you know it, who's in the Zoom room? Who's in the Zoom room? Who's in the Zoom room? Let me see. Okay, fine. The first name I see there is Alvin. So let's say Alvin has his own hedge fund company, and it's called Alvin Unlimited or Alvin ATP or LTD, Alvin Trading, whatever it is. So Alvin has got his own trading company. He picks up that 365 traders have now made a big buy on Euro USD. He's also an institutional hedge fund. So Alvin is like, yeah, I'm also buying. So look at what Alvin does. Alvin takes $2 million US dollars of his own money, nothing to do with my client's money, and he buys. But Alvin is now going to buy here by the red place, right? Because remember, Alvin, these trading firms, the smaller ones, that want to get in the Redalios, and I say small so humbly, they are very big, but I'm saying outside of the banks, they're entering here. I've created the orders, you know, the motion I bought there. So Alvin is buying there, and then all of a sudden in South Africa, we've got a bank called First National Bank. FNB is a bank. Make this black from the jump so I don't have problems. So now FNB is like, oh my God, what's going on? Right? Why are these guys buying? So FNB buys somewhere there, together with, you know, a lot of banks, whatever. Right. So now we've got motion. People are putting money. They're increasing the demand. The value of my asset keeps going up, which is what I wanted. I wanted to keep going up. So now we've got 5 million of my client's money, 2 million of another a company's money, Alvin, and all the other banks now together collectively, you know, 1 million there, 1 million there, they're putting about 10 million US dollars. What's happened? All of a sudden, all the trading textbooks in the world, the Forex gurus who will tell you, number one, look for a trend. Number two, when you get a trend, before you enter, wait for confirmation. That's confirmation for them. For a retail trader, this is confirmation. Green, 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 green. Buy, 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 buy. All of a sudden, they're like, price is going up. So what's going to happen here? Now we're going to start to see all the indicators creating blah, 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 dynamic support, resistance, price might dab here, then go up. Create an entry point for retail traders. This is where average, normal human being traders are entering the markets. Now let's recap. I have a buy low here. Alvin trading buys similarly low. The last banks which bought in the middle, no longer even in the low, buy there. That's it. We've invested 10 plus 2 plus 10. That's about, I don't know, 17 million US dollars. But my 5 million US dollars is not growing because I keep buying along the way. My 5 million US dollars that I invested is growing because everyone else is investing. Because I bought at a demand in the creation of a trend, in the ultimate low. What I'm doing now is, by the time price gets here, my 5 million is probably at 20 million because everyone else got in. But look at these retail traders. Look at where they get in. They are getting this asset at such a terrible price. Now I know my diagram is getting messy, but let's add some pricing to this thing. Let's say we bought this thing at 1,2 or 3,145, and I'm going to explain this. So this is Euro USD. So this was the exchange rate of Euro USD, and I bought Euro USD at €1.31 roughly. By the time price gets there, because of the appreciation of value, how much money has been put into price, this thing is now at 1,5014. I'll show you these numbers. These numbers are not that important, but they are, right? So what I'm referring to is these numbers by the side. So I'm not making random numbers up. You see here, you see my buy low, you see my major turning point. I've switched screens. I'm on screen, center screen, screen 2, right? On your guys' end will be screen 2. You see there, this is a buy low. Remember, we put this line here as a major turning point. Look to your right. This asset in the year 2000, 2nd of October 2000, the exchange rate was 81 cents, could probably buy $1 US. There's 81 cents. It's right there. Hey, okay, let's make it 82. Let's round up to 82 cents on this chart, right? I'm not making it up, right there. But by the time the almost 10-year plan was complete, just before the market crash, there's our thing where we drove the highest point. This asset, euro, was crazy. Literally now, it was at 1.67, right? From 82 cents to $1.67, or a pound or a euro, whatever it is. Now, I'll give you percentages because I know those are far much more easier to handle. If you ever want to get some information on your chart, just use this information line, by the way, and you just drag it from one point to another, and it will tell you a lot of stuff. Some of them will be difficult to explain. But I'm going to look at the growth between 82 cents to 1.67. According to this, it's at about 95%. You can see it for yourself there, right? So let's move this across maybe so you can read there. See there? 94.83, 95% increment. That's what happened. The demand kept pushing price higher and higher. You see, whoever bought down here bought at 82 cents. All right, here's another way to put it. But now let's talk about these people. Let's say this is where Alvin, the company that we created, Alvin's trading company, comes in somewhere here, buys the same assets that I bought as 365. He buys it for 99 cents. Now, the only way Alvin can make profits if this thing keeps going up. But thanks to Alvin and anyone else who's going to enter after Alvin, me who bought at 82 cents, I get to make more money. Let's go. Now, this is where the other banks, remember I said the other banks that are going to join in our city example, they get in even later at 1.21. Now, these guys, they're in, they've risked millions. They ain't getting out until they make money. So they need to see price go up. Look at the zigzags happening, and then all of a sudden, boom, price continues. What are retail traders waiting for? Confirmation. These guys start to get in somewhere here in my city example of 1.35. Now, if you're to remember what I said in tonight's introductory course, supply and demand works very well with rational-minded people. Rational-minded people understand the concept. Buy low, sell high. A supply is the amount available. A supply is the amount of, it's the preset price. I can't get it for anything more. I bought this thing at 82 cents. The price is telling me, look, man, this is the max I can give it to you. If I buy something for 82 cents and I sell it back to someone else, if I'm buying, someone needs to be selling. If I am selling, someone needs to be buying. If I buy a car, a second-hand car, a car which we both know is a depreciative asset, it goes down in value. If I buy a second-hand car for 82 cents, but there's someone dumb enough in the world to buy it from me, right? I bought it at 82 cents, it's losing value, but there's always someone, there's always that one person you can convince to buy it back from you at 99 cents, I've made a profit. And Alvin takes the second-hand car, which is now a third-hand car to him, at 99 cents, and he starts to feel that the clash isn't working, and he finds an even dumber person. So he's now looking for someone who's even more dumber, and he sells the car to someone for $1.35. He's making more money now. He's gotten rid of the asset, and he's checked out. Now, this person here needs to find someone super dumb who is going to allow them to sell them an asset that we all know is technically was worth 82 cents and is now currently worth $1. The banks are masters of this thing. They buy very low, take the exact same thing and sell it back to dumb people at a high price. Literally the same, this is the same asset. Euro USD, once upon a time was 82 cents, but managed to get sold at 1.67. I'm just trying to speak in terms of you to simply understand it. And all of this is profit, all of it, because if you're going to buy this low and sell that high, you know what you're doing in the markets. Right, switching screens again. So we're going back to the whiteboard. Back to the whiteboard. I've got 8 minutes left. I want to wrap this up. Tomorrow I'll be building around major turning points. There's still so much to cover. And I'll be building around the ceiling of price. I'll be building around how to profile an asset correctly. And we're going to do a lot of charts tomorrow around major turning points, because you need to understand what the banks are doing first on the monthly time frame. Right, now the problem is I bought 5 million bucks, whatever. Here, I've made 20 million. It's time for me to take profit. But retail traders haven't started to experience this. And number one. Number two, retail traders think there's a trend, right? They've bought into a trend after all. So anyone who's still buying here when I'm taking profit there loses money. Because for me to take profit, I close my buys, I open sells. What am I doing there? Look at the zigzag. I'm pushing price down. I stop buying to take my 20 million off the table. My client gave me 13. I risked 5 million in the market. I got back 20. My capital balance has changed, right? It's about 33 million US dollars now, right? In this crazy example that we're moving, it's not so crazy if you're in the banks. These are real figures, but I'm just saying, I want you to understand it. This is in my pocket right now. I have two options as 365. Because remember, if I'm leaving a demand, my target is here. I know that as the banks. Because as the banks, we're not trying to get there overnight. We are going to do 3 months, then we're going to have FOMC meetings. We're going to have interest rates adjustments in the next 3 months. Every year, we're going to take profits because it's our market and we're always right. And I'm going to do all of this in a 10-year plan in case our banking policies need to change every 10 years. So while this is my target, I'm going to keep eating. So while the retail traders are holding buys here, I turn around and I start to sell. Now they're like, we entered late. It's not only a buy trend, it's a sell trend. While the retail traders continue to pursue their sells, I go back now and I keep buying. Why? Nothing has changed. This hasn't changed. If markets leave a demand, they're going to a supply. If they leave a supply, they're going to demand. They will zigzag all along the way. My question to me is, would I then come back and add another 10 million here to buy as a rational trader? I know this thing is worth about $1.31. I exited at 1.50 and made a lot of money. Do I really want to come buy at 1.50? Or am I not going to negotiate for a better price? I'm going to push price down, negotiate for a better price, maybe enter at about 1.25. I know it's we're appreciating the asset, but I must find the logical low. The logical buy low is what we're going to teach you from next week, which is another type of supply and demand. But essentially, this game will continue. Price will move from supply to demand. In fact, for the last 5 minutes I have, I do want to allow you guys for Q&A. I'm going to quickly go just find a random chart so we can have a quick look at it. We'll unpack it tomorrow. So I'm just going to scroll and then stop randomly. Right, we've got pound CF. I hate this chart with a passion. I'll tell you why sometime in our journey together. There we go. What do? Find your horizontal array. After zooming out, boom. Find out what the highest turning point was. It's over there. It's clear. Price went up. What we're going to do here, boom. Lowest turning point, clear as day. Then I'm going to draw a zone. What's that zone? That's my major turning point zones. I'll teach you how to draw the zones correctly. There is a specific way you do it, right? That your area of value honors what we consider supply. But we can only do that kind of stuff after our registration closes, which is tomorrow. Tomorrow is the last day of early bird registration. So if you haven't registered, if you haven't enrolled, then obviously this lecture will stop going public, and then we can start to talk about deeper things. Essentially, I found what seems to be the flow of pound Swiss franc, and also the height. I mean, this chart is so boring and so basic. There's not a lot of movement, but look at this. Price left this major turning point, which is what we're talking about here. Clean sell all the way down to this demand, right? The year here is 2007, 2008 financial crisis, and the year here is about 2011, and then price struggles to leave and comes back down inside this area in about 2016, which it really gets us close to that 10-year plan. So you see price didn't break out, and then markets dwindled down for a while. On the way down, even for your governor, he did not break rank. On the way down, the governor did not break rank. He dropped to profits. See that there? Drop, 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 and all of a sudden, short-term buy, the zigzag approach. It is different now because it's a sell. Before it was zigzag up, this is zigzag going down. Literally, this happens on every chart. And this is what traders misread on every chart. What is the zigzag doing? Is it a change of, remember the monthly time frame? Please don't be too harsh on retail traders. One candlesticks represents 1 month. That's 4 weeks of trading in one candlestick. If you were to see price go up for 1, 2, 3, 4, 5, 6, would you not believe that there's an uptrend? That's 6 months of trading where markets are no longer going down, right? We'll teach you how to read all that stuff correctly. But the zigzag plays a big role on your monthly time frame, and it shows you the flow of money. What positional traders do, which is banks will open big positions here, add more sell positions there, take profit as they go along up until there. And I need to teach you how to do that, right? Guys, that's our time for tonight. This is technically the first real lecture in our series. Are there any questions? I quickly want to open the Zoom chat box here. Are there any questions, any areas of clarity that you want me to quickly cover before we call it a night? I'm trying to do the right thing on week 1 and end on time. Because from week 3, I'm going to be asking for an extra 15 minutes. You'll see. Right, I've got to clear. Any questions, guys? Are we good? Anyone going once? This is your class. Going twice. Clear, but again, thank you. Not from your side, fantastic. Right, guys, shake my hand and thank you so much for joining me. It's been an absolute pleasure. I appreciate all of you. Tomorrow is Thursday, so we've got class tomorrow. Same drill, same time. All right, I'm hoping to be slightly more organized by tomorrow. So if you're already registered, maybe before I sleep, I will send you a private message tonight with the link to join the private students Telegram group. Do not share that link with anyone, please. I see everything. I'll kick whoever you add there and I'll kick you out. Please, that group is a safe place for you. That group currently has people who've either just finished the course or just did the course recently within the last year who are in a next level. They've mastered the 8-week course and they are now starting to trade. They're starting to trade. Now, before I go, before you run away, it's 8:30 on the dot. So there's only like 30 seconds. I want to explain something as quickly as possible. I appreciate all of you for taking my course. I really do. This is me. This is not to say I am better than anyone. I am not. I am simply explaining to you because of my 8-year experience in this whole thing, because of my research background, because of my trading experience, that's where I am. Most of you joined because of that. You joined because you've seen me trade live accounts. I don't know what. I have no marketing team. I literally do not spend a single dollar on a marketing budget. I'm growing organically. I love that. There is no marketing department at 365. Like I said, my entire team, we're full-time traders, but we believe in this vision to help Africa. All right, it's predominantly Africa, but we got Jay there from the Philippines. What's up, man? All right, so this is me. This is why you guys joined. Inside the private Telegram group are students somewhere here who have taken the course are starting to see these things work, but they sometimes experience losses and they're like, why did I not follow the rules? Why was I being emotional? Did I miss something? They're in some learning curve right in here. And then this is you. I'm going to use green for green apple. You just joined on this journey. You are going to give yourself a tough time if I'm your target. I can't be your target. I am not your target. You don't want to be like me right now. To become like me is to create a time machine and condense the last 8 years of my life overnight. You can't do that. What you want to do is to start to pay particular attention to the most active people in your group and join them. Become active, share charts. Don't expect me to answer everything because I won't. I promise you I won't. I will look it through. But there are people here who know what they're doing and are in the learning ropes, who are literally excited about their journey. You're excited about learning. They're excited about trading. These people are your targets. When they talk amongst each other, what are they saying? What are they saying about that area of value? What is it that they know that you don't know? This is a realistic target. These people, I told them when they joined as well, that I am not their target. They are not looking up to me. They are people in our academy, a separate group called senior traders. There's a few six-figure traders who have finally graduated. There are 6 prop firms within that group, which I'll talk to you about another time. This is what these guys want. These guys want to learn how to grow their accounts into this level. These people here are full-time traders. They live off the markets. They don't have part-time jobs. They are committed. They love it. They are consistent. Their lives are built around it. The people in here are trading while hustling, while preparing for that journey. And you guys are in the learning phase. I am these people's target. These people are coming. This is a logical goal-setting time period. With goals, you always want to have a realistic time frame. How long do you want to stay a learner? How long do you want to stay intermediate? How long do you want to enter the senior traders program? And then this is for the rest of your life. And just before we go, please understand that, right? Understand your target, understand your goals, because this will cut you off. You will not be able to do what I do overnight. There's a process behind it. I'll talk to you guys about the traders process and I'll include it in your first PDF, you'll see. But yeah, from me, guys, I appreciate all of you. Have a lovely night. Can I have the recording? Yes. Oh, the sound is poor on your side. Not a problem, sir. Gift, if you want, you can just quickly go to the 365 Trading Academy page. Tonight's class was live there as well, so you can watch that tonight immediately. The sound will be fine. The recordings for lecture 1, lecture 2 today, and lecture 3 tomorrow. I always send everything to at the end of the week, right, to registered students together with your weekly PDF so that you can make your own notes, rewatch videos if you want. So that will happen. But for the first week of every intake, the first 3 lectures are public for those people who are not sure if we're real and they want to see us first before they pay and register. All right. So Gift, I hope that helps you, buddy. Hope that helps you. Good night, everybody. I'm going to end the meeting now. Thank you so much for attending. I'll see you tomorrow. All right. I'll see you tomorrow. Good night. Shake my hand. And obviously, good night, everybody who's watching the live. Cheers.